Start with the news that the U.S. Federal Reserve has increased the key interest rate for the first time since 2006. It's a momentous announcement, as the rate has been at unprecedented low levels since the global financial crisis. For more, we are joined by Shin Se in the studio. You've been with us since the early hours of this morning. Can you give us a rundown of everything that's happened?
Yes, Mark, it was a decision that many had been anticipating for. After 7 years of rock-bottom rates, the U.S. Federal Reserve announced that it will increase its benchmark rate by 1/4 of a percentage point, bringing it to a range between 1/4 to 0.5%. Shortly after the announcement, Federal Chair Janet Yellen gave a press conference laying out the reasons behind the decision. Take a listen.
Since March, the committee has stated that it would raise the target range for the federal funds rate when it had seen further improvement in the labor market and was reasonably confident that inflation would move back to its 2% objective over the medium term. In our judgment, these two criteria have now been satisfied.
The Federal Open Market Committee judged that the U.S. economy and the labor market is healthy enough to begin the process of normalizing rates, recovering from the worst financial crisis since the Great Depression. Now, the U.S. labor market added 211,000 jobs in November, totaling some 2.3 million jobs in the past 3 months. And the Fed is hopeful that the inflation is starting to climb to its target rate of 2%.
And we'd heard talk about this rate increase being on the horizon for quite some time now. In fact, the days before this, we were hearing 97–98% of analysts were expecting it. How have the world's financial markets taken it? We hear Wall Street is up. How about the Korean market opened about 3 hours ago?
That's right. In the early hours of trading, Korea's Kospi jumped 14.6 points and the Kosdaq went up 6.65 points. Now, the positive trend is visible elsewhere in the region as well. Japan's Nikkei also opened 1.5% higher. Australia's S&P is up 1.6% after an hour of trading, and New Zealand's benchmark is up 0.2% as well. Now, the upward trend did not, however, extended to the oil, where the supply glut has kept prices down again. Now on the Wall Street, the Dow Jones index closed with a gain of 224 points, while the S&P 500 went up 1.45 and the Nasdaq 1.52%. Over in Europe, UK's FTSE 100 stayed strong, closing up 43 points, and Germany's DAX 30 rose 18.9 points.
Yes, well, we're looking at the graphs there while you're talking to us, Semin. It seems the dust is still settling on this announcement, only made about 8 hours ago. It seems thus far, though, that it's a good sign for investors. But how is the Korean government taking this news?
Yes, the senior government officials gathered for a meeting in Seoul early this morning. Vice Finance Minister Chu Young-won said the Fed's decision will have a minimal impact on Korea and said the fundamentals of the Korean economy are solid. Regarding earlier concerns about a potential capital outflow in emerging markets, including Korea, the vice minister stressed that Korea has a sufficient amount of foreign reserves, distinguishing it from many other emerging countries. He also promised to beef up monitoring of market developments and said contingency plans will continue to be updated and will be put into place when necessary. He also said that the Korean policymakers have also have a tough decision about whether to follow in the Fed's footsteps and raise the country's record low interest rate that stands at 1.5%. But if it happens, it could push the country's record high household debt, which surpassed the $1 trillion mark this year, further and put a burden on borrowers in Korea who once enjoyed the lower rates. So lots to consider for Korean economists.
Yes, and we must remember as well that this is just the first step. The Fed has laid out how it plans to keep raising the rates over the next year and the year following that. So it's going to be a big story for the Korean economy. And of course, if interest rates here in Korea have to go up as well, that could potentially have a big impact on homeowners here. Well, thank you very much, Semin, for your report.
My pleasure.